This is Newslife.
Meanwhile, the 6% GDP growth for the third quarter of this year was welcome news for the business community. And they also see better days ahead for the economy. More from Freddy Abando.
It has been a tough year for the global economy, and yet for the Philippines, the growth of its gross domestic product hit 6% for the third quarter to recover from its 5.8% for the previous quarter and 5.4% for the first 3 months of 2015. It was good news for the business sector, although the country ranked third in Asia, with China on top and Vietnam second, and rising as the best performing economy in ASEAN. Slow government spending has been addressed to allow the implementation of key infrastructure projects all over the country. Investments in infrastructure projects will hit 5% of GDP in 2016. It will amount to a little over 800 billion pesos. Public-private partnership programs will account for an additional 3%, but it's 2% below the average spending of ASEAN's top economies.
The 6% target for the entire year is achievable. After the report yesterday on the third quarter achieving 6%. It was below 6% in the two previous quarters, and even in the third quarter last year is below 6%. So it reflects the fact that finally we're seeing more of the public sector spending moving up towards the target of 5% of GDP for next year. This administration has increased public sector spending by 3.6 times from 2010, when it was less than 2% of GDP. So there's a lot of spending on infrastructure and other public sector spending and health, the social infrastructure. But there's such a backlog of infrastructure to be built that I think for the foreseeable future, the poor infrastructure, until it's really modernized, represents a ceiling or a constraint on higher growth.
I think the growth prospects remain strong. I think with a combination of an election cycle in terms of spending, which normally boosts consumption, if we can maintain the public spending and the private investments, I think prospects are still good.
The gains in services and consumption spending was also good news for Forbes and Luz. The BPO sector and tourism sustained the drive to generate more jobs all over the country, although both expressed concern on the impact of the El Nino to agriculture.
If you just look at the report from yesterday, services continues to do quite well, above 7%. And at the other extreme, agriculture is a major disappointment, 0.4%. That's barely any growth. Well, you can say that the drought was there. Essentially, the sector badly needs a whole series of major reforms. Agriculture. In between, you have manufacturing, which grew above 5%. If we look forward, services will continue to grow.
Services is strong, so that's where we make it up in services. We also make it up in household consumption, domestic consumption. That remains still strong. We have remittances, we have the earnings from the BPO industry, tourism receipts coming in. So that fuels domestic consumption, and I think that's where the slack will be picked up from there.
Although manufacturing maintained its steady growth, exports were down due to the slowdown of the global economy. The major market was APEC and its member economies. Despite this, Forbes sees a great opportunity for the Philippines to attract foreign companies relocating from China, since the cost of doing business in the mainland is getting to be more expensive. But then, the government should provide key incentives for the foreign firms to put the Philippines first in their list.
Manufacturing could do better, but I don't think your viewers or the country is sufficiently aware of what's happening in China, which of course is is becoming the largest economy in the world, but it's also shedding a great deal of its early foreign manufacturing investment. leaving China because wages and other costs are going up there. So they're going to lower production cost centers nearby. They're going primarily to Vietnam. We are getting some here, which is very good, but we could be getting a lot more of that here.
We are depending really on the strength of our own markets. If you take a look at APEC, that's about 75 to 80% of our exports go into those economies. So if those economies remain strong, then of course our export performance will be strong. But with the way the global economy is running now, that has softened. So I don't think we'll make it up quickly in trade and goods.
NEDA Secretary Arsenio Balisacan is hopeful the full-year growth of the economy will hit 6%. The original forecast was 7 to 8%. Luz said election spending will be a big plus until the May elections in 2016.
Well, you know, with election spending, it cuts both ways. Just on the candidates alone, they were going to be putting a lot of money into the economy because of all the campaign expenditures and election-related spending that goes with it.
For the People's Television Network, this is Freddie Abanda reporting.